What's going on, guys? So I'm back with another little video, and today I'm going to be going over the importance of time frame correlation. So if you don't know what time frame correlation is, it's basically using all of the time frames when trying to get into one trade. A lot of people might say, oh, I only trade the 1 hour time frame, or I only trade the 30-minute time frame, when in reality that's not going to work. You could take trades only on the 30-minute or the 1 hour time frame, but overall, if you're not looking at the daily, the 4 hour, the 1 hour, the 30-minute, the weekly, not knowing what's going on overall, is not going to benefit you. You can get lucky, yes, trading on one time frame, but it makes more sense to look at every time frame and give you the higher chance of getting into a trade. So the importance of higher time frame. So if you understand how higher time frames work, say there's an uptrend, you have a retracement, a higher high, break this high, come down, have another retracement, higher, have another retracement, higher. This is just basic trend. This is on a higher time frame. So say this is on the 4 hour, is making these higher highs, and it's also making these lower lows right here. This is just basic. But now, to get when it gets a little bit more in depth, is when you go into a smaller time frame. So within this higher time frame, say this is the 4 hour, on the 1 hour it could be like this. Then it has a retracement, makes the higher high, has its retracement, makes it higher high, has a retracement, makes it higher high. So it's more higher highs and higher lows, but it's overall in the same trend. So higher high, making a higher high right here, higher high. So it's doing the same thing it is, also making lower lows, but on a lower time frame is gonna be more messy, I should say. So say this is the 4 hour, this is the 1 hour. The 4 hours in this high uptrend, the 1 hour is doing this. But you basically have to know what's going on overall. So say right here at this point in time, you can get into sells and you want to see if it's gonna break this. But knowing overall that this is just a retracement of the overall time frame. So say whatever you do, what you do, you pull the fib from this level, blah blah. Let me just do this for the video's sake. Say it's right here. You're not gonna sell in this area because you know on the higher time frame, this is still keeping this uptrend. So let me just erase all this, and I'm gonna show you what the actual charts with candlesticks, just so it makes it a little bit easier. This is just a little example. Okay, so let's move right over here. So right now we're on the 4 hour time frame. As you can see, we're in an overall uptrend, but as of right now, we're falling and we're printing bearish candles. But we know that we're still holding these lows right here. I'm anticipating we're gonna break these lows, but the reason I'm anticipating that is because I know on the daily, this is very bearish. On the daily, we are bearish from all the way up here. We're keeping all these lows, respecting these lows on the daily time frame. If I go to the 4 hour time frame, it's doing the same thing, like I said, but it's making higher highs and higher lows. So it came down, went up, came down, went up, came down, went up. Now we went down. I'm anticipating for price to possibly come up once again, to then come down again. And I know that because I know we're bearish on the daily time frame, but I know on the weekly time frame we're overall in a very, very high uptrend. This is very bullish as of right now. So it wouldn't make sense for me to have long-term shorts in a very bullish market. So look, the thing with these candles, you got to understand that these candles are all inside of it are smaller and smaller candles. So if you go down to the hour time frame now, we were just on a 4 hour, you see way more. But if you understand what's going on the 4 hour, then a lot of it isn't going to matter, because you're still going to be looking for your confirmations on this lower time frame. Lower time frames are the time frames you want to get in at, because you can get the best possible entries, and you want to look at the higher time frames for your structure, your levels, and all of that. That's why I always mark up. If you guys realize, I always mark up the daily and the 4 hour, and then on the 1 hour and the 30-minute is usually when I'm going to be taking my trades and getting in, because I intraday trade. I'm a day trader, so I get in and I'm only in a trade for about 2-3 hours, maybe even less, an hour and a half, sometimes 10 minutes to 15 minutes, depending on if there's volume in the market at the time. So if you understand that, right now we're falling, but we're rejecting right here. So if you understand that we might want to have a higher high, a higher low, then we can anticipate price to come up to here, to then keep falling to these areas of imbalances, a 4 hour fib, but you're using these lower time frames as basically just your confirmation. The 4 hour, this is where we did all of our analysis. We know what's going on and all of that. So let's move on to another pair because I don't really trade GJ. Let's go to US30 because it's the same thing. If you understand that on the daily time frame or the 4 hour time frame, we're in a strong uptrend, candles like this right here aren't going to matter to you because you know that we're in a very strong uptrend and we're not going to expect, oh, because this 4 hour candle is bearish, now we're going to break this whole trend. No, because we know overall on the daily is very bullish. 4 hour is bullish, but this looks like it's just having a retracement. And if you understand retracements, you understand how to use a fib, you understand that right here, look where it is, 62%. So even though we were rejecting this 34,500 area on the 4 hour, we had this 4 hour bearish candle, we're still anticipating price to keep pushing up due to our higher time frame correlation. Same thing with lower time frame. So if you go down to the lower time frame and you watch this area, what it's doing, you can see that the volume is starting to lose momentum now. So say these candles were very strong candles, these candles will be pushing all the way down here, closing into these fibs. It wouldn't be rejecting it. And then now you start to wait for this on the lower time frame. You wait for rejection and you wait for candlestick, basically confirmation. So you wait for it. So now you're seeing some bullish candles. Mind you, we're on the 1 hour. So you go to 4 hour. Okay, we're kind of like what it is. But now using the lower time frame for the 1 hour, we're losing momentum. We're overall on the higher time frame. We're in a bullish uptrend. We're bullish on the daily. Also, this downtrend right here is not going to scare us away. We know overall what we're looking for. And look what happens. Price keeps trading up. That's why you have to use a higher time frame. So say someone was trading on the 1 hour and they only trade on the 1 hour, they wouldn't have realized something that's going on the higher time frame. Something like this, a retail trader is just gonna try to get short wide because they're rejecting this 34,500. They just have to stop above this candle. And where are they gonna target? They're probably gonna target this low, or they're gonna target the next resistance, which is all the way down here. When in reality, the reason I have these fibs is because this is where I like to get in and out of the market because it gives you a reasonable spot that price is likely to go to. So say they would have been, okay, they do this, their candles are already going break even, and just like that, they would have been getting stopped out within a few hours of being in the trade. When if they would have been looking at higher time frames, they would have understood, oh, we're still in this uptrend. This looks like it's just having a retracement for this overall very big candle that we had. Because the thing with US30, the bigger the candle, the bigger the retracement, and that goes for anything, not even just US30. It's just all how the market moves. The bigger the candle, the bigger the retracement is going to be. So you can't let candles like this scare you away, because you got to understand what's going on overall in the whole market as a whole. Because the thing, if you guys understand fractals, the same thing that's happening right now in the 4 hour is also happening on a smaller frame on, say, the 5 minute. So the same thing right here, look at all this. See this right here, this little frame of candlesticks? This looks identical to what's happening on the 4 hour, but mind you, this is all within just like 2 hours of time. This is from 8:30 in the morning to when the market closed. So the same thing right here, what does it look like? It looks like this whole 4 hour right here. 4 hour right here. And mind you, this is from May 13th to June 4th. So this is in the span of months. Not months, but a few weeks. So you got to understand that time frame correlation is very important. You have to be able to read what's going on a higher time frame and then go into the lower time frames to then get into those trades. Higher time frame is going to always be stronger than the lower time frame. So I don't always use my 1 hour to mark my levels. Most of the time I don't use the 1 hour to mark my levels. I only do it if it matches with the 4 hour or the daily. So as you can see, as of this point in time, we know that we're in an uptrend. So if you watch my markup video, you would know why I have all these marked up in this area. There's an imbalance right here, and this is a continuation level. So we know that US30 is overall in an uptrend. We're anticipating price, since it's losing momentum right now, when the market opens, we could have a retracement down to this level to possibly see a continuing push to come up to this 4 hour order block, 34,888.55. But we also know that there's also levels down here that could be targeted. So it's always good to keep that in the back of your mind. That's why you look at overall all the time frames. So we're on the hour now. On the 4 hour, this is all bullish. We'll be expecting candles to fall. We'll be expecting maybe a 4 hour bearish candle, bearish engulfing, but we're not going to let that scare us away because we know overall we want to see price go higher. So when price comes down here, if we start getting the same confirmations that we had over there, if we get bullish engulfing candles down here, if we start losing momentum with the market, we can anticipate price is going to hold this level after filling in this imbalance to then trade higher. But if the candles, like I said before, start to close under, start closing like this, say this is the close, this is a bearish candle, then we can anticipate price is most likely going to try and fall all the way down here. Then we'll look for the same thing. We'll wait for confirmation in this level to then wait for price to go higher. And we know that because of the 4-hour and the daily, because we know we're in a strong uptrend and we know where we want to go. We have imbalances up here. These are higher time frame imbalances, 4-hour imbalances. And that's basically what we're going to be doing. Hopefully this video showed you guys why it's important to have time frame correlation, why it's important to look at all the time frames, because you got to understand what's going on at all times. The candles are telling you a story and you have to be able to read the story. You can't do that just by reading 5-minute candles or 30-minute candles all the time. You have to know what's going on in the higher time frame and then use that to get into your trades on the lower time frame. That's really all it is. It's nothing complicated. It just takes practice reading all the time frames, marking up from a higher time frame all the way to the lower time frame. That's why when I mark up my charts, I always start on the higher time frame, because you got to know what's going on at all times. So hopefully this video is beneficial and it can show you guys the importance of it, and I'll see you guys in the next one.